Today, we're going to break down the major forces that are shaping the cryptocurrency market as we look out toward 2026. What we're seeing is this incredible tug-of-war between two very different, very powerful currents, unprecedented political pressure on one side and a deep, fundamental shift in the market structure on the other. Our whole conversation really kicks off with this. This is a pretty wild statement from Federal Reserve Chair Jerome Powell. He's basically confirming, out loud, that the Department of Justice served the Fed with grand jury subpoenas. This is a direct challenge to the authority of the central bank, and frankly, it's something you rarely see play out so publicly. So, that leads us to a really crucial question, doesn't it? The stability of our modern markets really hinges on the idea that our key institutions are independent. When that independence gets challenged like this, it injects a profound sense of uncertainty that can send ripples through every single asset class, and that absolutely includes crypto. Okay, so to really get why this is such a big deal, we need to talk about this one core idea: central bank independence. It's the bedrock principle that economic decisions should be shielded from short-term political whims, that policy should be driven by data. And what's happening now, it's like a tremor right at that foundation, threatening the very stability that makes the US dollar the world's reserve currency. So you see, this isn't just some political spat. This is the starting gun. Powell's public statement, you've got to understand, it wasn't just him talking to the press. It was a strategic move in a much bigger, high-stakes game over the future of monetary policy. This event really sets the stage for all the uncertainty that follows. All right, so this political showdown doesn't just happen in a bubble, right? It creates ripples, and the source material we're looking at points to three specific, let's call them headwinds, that we really need to watch out for in the near term. First up, you've got the question of who's even going to be running the Fed. A change at the top always brings uncertainty about where monetary policy is headed. Then you have the classic government shutdown deadline looming, which always puts a damper on the economy and investor confidence. And as if that's not enough, there's a huge Supreme Court decision about tariffs hanging in the balance that could change trade policy overnight. Any one of these on its own would be a big deal. But all three at once? That's a real recipe for some short-term jitters. But here's where it gets really interesting. While all that chaos is swirling around Washington, the crypto world is actually pushing for the exact opposite. They're tired of the ambiguity, and there's a huge legislative effort happening right now to finally get some clear, predictable rules on the books. And this slide really lays out the contrast perfectly. On one hand, you have the current situation, which is, well, it's a mess. Nobody's really sure who's in charge, the SEC or the CFTC, and the rules are basically made up as they go along through lawsuits. But on the other hand, you have this proposed Clarity Act. The goal here is simple: replace the chaos with a clear roadmap. It's the industry trying to build its own solid ground to stand on. And make no mistake, the pressure is on. This quote from Cardano founder Charles Hoskinson really drives that home. He's essentially saying, look, this is our shot. The way the political calendar works, if this doesn't happen now, the industry could be stuck in this regulatory limbo until 2029. The window of opportunity is closing, and it's closing fast. So this all brings us to a really fascinating question. You've got these massive new forces at play, huge political pressure on one side, a major regulatory push on the other. Does the old crypto playbook even apply anymore? Specifically, we've got to ask, is Bitcoin's classic 4-year cycle about to break? If you look back, the pattern has been almost like clockwork. You have a halving event, that's when the new supply of Bitcoin gets cut, and then like 17 or 18 months later, you see a market peak. It happened after 2016, it happened after 2020. So if history were to repeat itself perfectly, the 2024 halving would point to a peak in late 2025. But, and this is the big but, the analysis we're digging into today seriously questions if that's what's going to happen this time around. Right, so this brings in this other idea that's been gaining a lot of steam, the super cycle. Now, this isn't just about a bigger price pump. It's a theory that the whole rhythm of the market might be changing. We could be looking at a future with longer bull markets and maybe shallower corrections, all because there are new, powerful players in the game for the very first time. And this isn't just speculation. A really interesting analysis from Fidelity highlights 3 potential drivers for this kind of shift. First, you've got big institutions finally coming in with steady, serious money through things like exchange-traded products. Second, that regulatory clarity we just talked about, if that passes, it's a huge green light. And third, we're starting to see signs that crypto is acting more like its own asset class, not just following the S&P 500. It's starting to mature. Okay, so we've got all these moving parts. How do we make sense of it all? Well, instead of trying to make one single bold prediction, which, let's be honest, is usually a fool's errand, We can use this analysis to build something much more useful, a framework of different scenarios based on what actually happens with these key events. And here is that framework. Now, the key thing to understand here is that these aren't just random price predictions. They are conditional. They depend on certain things happening. For instance, that bull case outlook, that only comes into play if we get both the Fed starting to ease up and the Clarity Act passing. The base case, that happens if we get one or the other. And the bear case, well, that's what we're looking at if neither of those catalysts comes through. You see, it's not about fortune telling, it's about if-then logic. So when you put it all together, you can see that the crypto market, as we head towards 2026, is really caught in this incredible cross-current. On one side, you have this wild, unpredictable political drama playing out. And on the other, you have the market itself trying to grow up, trying to evolve into something more stable and legitimate. And that leaves us with a final and, I think, very practical question to take away from all this. Instead of trying to guess the future, what are the key signals we should be watching to see which way the wind is blowing? Well, based on this whole framework, it's actually pretty clear. We need to watch what happens with the Fed's independence, we need to track the legislative progress of crypto regulation, and we need to keep an eye on whether that big institutional money keeps flowing in. Paying attention to those signals will likely tell you a lot more about where this market is headed than just staring at a price chart ever will.